What's up? All right, cool. Looks like we're live now. Let's get it. What up? What's up, guys? Let's get the chat going. Let's get the people going in here. We're gonna go ahead. We're gonna start in a few minutes. I'm gonna make sure that I shared this the way I intended to. So give me a sec here. All right. Okay. So I shared this pop-up just announcement, kind of came out of nowhere here. Felt a little signals for apps. Yeah, you're funny. I'm gonna go over the setups that I took this week. So and then this way you guys can kind of see how I validate my trades. I may go over which ones I didn't take, or maybe a lot or two as well. But yeah, we'll go ahead and get this cooking here soon. Just want to let a few people here tap in. All right. All right, cool. What's up, Jess? So we got Netherlands in the house, Chicago's in the house. Let's go. I know I kind of did this last second, so I won't wait. I'll wait a few minutes before we get cooking here, before we get started. You guys can obviously share this. It's on YouTube, so it's all good there. All right. How'd it go for you guys this week? Did you guys take any trades? Were y'all chilling? How did FOMC go for everyone today? So before I start, what I'll say is we'll probably be here maybe 25 minutes, maybe 30. We'll see. I'm not looking to take too much time here. I'm gonna go over. Let me see. Let me count how many setups. I'm gonna go over 4 setups today, and I'm gonna show you guys kind of like how my thought process behind how I journal them on top of that too, so you guys can kind of see my thoughts, the way I make sure like what's important when I'm journaling things. I got that question today too. Hola, what's up? Yes, yo, what's good? It's my boy. It's my brother in Christ. Kev Nav. What's up, fam? Break even this week. Hey, surviving, live to fight another day. That's what's up. Yo, trade, travel, impact. Love that. That's a good life. Those 3 things right there, that's a good life. Miguel in the house. What's up, Miguel? Hope you're good, bro. All right, I see y'all. So it is now, all right, 3:31. I'm gonna give it 2 minutes and we'll get it cooking. What I will say here, and before we kind of, I guess, get really going, this week I approached this week, and a lot of people ask me in terms of like, what are my goals? Like what is it that matters when how much percentage am I going for? How much money am I looking to make? And I had this question get asked to me in a chat that I'm in. Like, what's the goal? What are you going for? When do you stop for the day? And while we're waiting for everyone to kind of hop on, thanks, babe. I didn't realize this was, I guess, a very different thought process. That makes sense because I definitely used to do things a lot different. But let me drop this a little bit. Actually, here we go. So I didn't realize this was a different approach, but I don't go for a certain amount of money or percentage in a day. But also, on the other hand, I'm not looking to stop trading either in a day, if that makes sense. Like, for example, some people, if they make a certain amount of money or a certain percentage in a day, then they stop. So I also don't do that. And the reason I don't do it like that is just because I'm not really looking for, I don't know what the next trade's going to do, right? It's a random distribution. So you just, it's not even like flipping a coin because sometimes your win rate might be worse than that. But so since we have no idea what's going to happen next, unless I have some sort of trading mental block, unless there's some sort of emotional issues going on, or which I just don't really see ever happening. But unless there's something influencing the way I think, the way I act, and I'm aware of that, then I will. If for example, some crazy out of pocket experience happened right before, the day before, that week, and I know I'm just mentally not making the best decisions, then it might be like, you know what? All right, I think I'm gonna call it a day, or I might not even trade that day. So that's one thing to understand. But outside of that, let's say I want a trade or two or even three, if I have a setup, because I'm not like scavenging the market for a setup, but if I do have a setup, then I'm going to take it. If it follows the confirmations that I need, cool. I know what my risk tolerance is. I know what my risk percentage is, and that copies over to all my other accounts. And then cool, it's done. It's a done deal. Then I can go take the trade. So that's just how I approach the market. Like, and I wanted to give you guys a little bit of I guess, my perspective on how I view things because at where I'm at now. If let's say, for example, you kind of know yourself and you're like, you know what, I might be self sabotaging later in the day for, for whatever reason it might be, then yeah, then it's like, all right, you want to create parameters so you're okay. But for me, honestly, like I'm pretty good. Plus, I do have a schedule day, like a couple hours after New York opens, I'm already at the gym, and then I have certain meetings I have in place. So I actually really schedule my day so I'm not on the charts all the time and just losing my mind tapped in here. But cool. I think we gave it enough time for people to start hopping on. And this is a pop up, so who knows how, like, what, I have no expectations on how many people are here. So we're gonna go ahead and get started, guys. So today we will be going over the trades of the week. I didn't want to do trades of the day, so I kind of wanted to give you guys quick recaps on the day if it took a setup or not. Pretty slammed week. I've been writing a lot for one of the books that I'm writing, and so yeah, I've been doing a lot of work there. So I was like, you know what, I'm gonna cut back a little bit on the YouTube. But today, I had like 30 minutes slot, so I'm like, you know what, let's throw it up here. Let's vibe. I am chilling at Nancy's sister's spot, so it's definitely, just random things around me. This is a Bulls jersey, man. This is actually my Michael Jordan jersey. But Chicago Bulls Jordan jersey. But yeah, so I'm in a random spot, no fancy camera today. We just chilling. But I'd rather just get to talk to y'all than have a a perfect studio setup. So let's get it, guys. I'm gonna start sharing my screen, and then I'm gonna pay attention to the chat just to make sure. I'm gonna have it pulled over on another spot so that I can just read this and then go over it at the same time. So let's go here. All right, perfect. Cool. MJ the GOAT, you already know. We're not going to have that conversation. I know where y'all want to go with this, and we're just not going to do that. All right, I got y'all pulled up. How many trades do I take in a week per month? This week I took 6 trades this week. On average, I take on average, I'm ranging anywhere from like 25 to 35. Yeah, give or take. This has been a busy week month for me though, which is weird because apparently people take August off, but I don't know about all that. All right, so let's dive into it. Let's see, what do I want to show you guys here? Window. Yeah, all right, cool. So I'm gonna just share with you guys my whole screen. Am I a scalper? Nah. I wouldn't say I'm a scalper. No, but I do have very small time frame entries. So it depends because I'm not scaling in and out super quickly, 1 to 2 pips or 2 points. That's not really my play. So I wouldn't say I'm a scalper, definitely intraday. It just depends. Because I'm trading something so volatile, there are moments where we get, 60, 100 points within minutes. That does happen. But I'm not looking to just collect a little bit at a time. It's not something very minute. It is a decent range in the market. So it's more so precision based, and that risk to reward kind of, it almost looks like it could be, because I do go all the way down to, with indices at least, with the smallest time frames. So, all right, guys, I do have a couple things here pulled up. All right, but I'm gonna go over 4 trades. I took a couple other ones, but these are the ones that, with the time being, I think I like the best, and I wanted to go over them with you guys, and kind of organize, kind of double think, which were the trades of the weeks, why did they go well, but also I wanted to show you guys exactly why, how I process these trades. So, for example, we'll start from the beginning of the week, which was on Monday. So on Monday, I took this trade here, and I'll open it up for you guys right here. And this was a setup, pretty simple setup on Monday. So had quite a bit of liquidity here building up. We had during London New York overlap, like right around that time, a nice sweep to the upside, clearing some liquidity. Market works its way down, and then when we see price come down, now this is a 5-minute time frame, right? Once we see price come all the way down to here, now we do get price that sweeps these lows and basically makes lower lows. At the same time, we were looking at, I always look at US 30, NAS, and S&P. So I have all of them out at once. Let me make sure that, all right, y'all can see this screen. All right, perfect. And at any point in time, y'all got questions, just let me know in the chat. Feel free. This is your home to get as much value as you want. So at this point in time, right, really more than anything, this is a 1-minute type of trade for me. So we got the sweep of the highs, then we get to these lower levels. Now, if I were to be trading forex or metals, I don't really trade like, I need a little bit more information. But with indices, the small time frames respect these concepts really well. So then what happens was, had price come all the way back. It got close twice. You see how here, 2 different times, price almost got to where we saw the beginning of this buy right here. So once price got real close, but here finally we saw price clear these equal highs right over here. And then why did I get in here? Right? Why did I not wait a little bit longer? Why did I get in so early here? And it actually had to do with what Nas was doing, because NASDAQ and S&P, they were both more bullish. So US 30 in this range, and I can kind of show you guys this here. Let me know if you can see me switching charts over as well. All right, perfect. So if I go to August 14th around New York Open, which is like, I think it was a little bit after New York Open. All right, August 14th, perfect. So if I'm looking at this here, so price is at the same time. I want you guys to see one at what time I took this trade. Let me zoom out a little bit. It was right around here. So it was right around closer to 11 a.m. Central Time, my time. So then what am I seeing happen? I'm seeing the market ranging, right? Ranging. So at this point, when I look at, and then I always use the bar replay tool. So this tool here at the top, I always use this tool to just be able to back test more clearly. If you're not doing so already, definitely make sure you're doing that. But at this time, what am I noticing? We see a big pullback, right around here, and prices on NAS is just super bullish. And so when I'm seeing NAS fly to the upside, and I'm seeing US 30 just kind of ranging, that gives me, all right, you know what? US 30, it is spiking up, but it doesn't have the same type of strength. There's the same type of bullish strength. And so once this got to my point of interest, where they can close out the buys to open sells, once I got to here, boom, that's where I strike. So this right here, able to take a nice push down, And so this trade, I actually ended up manually exiting. And here's why. With this trade, and I want you guys to really like, if you're an advanced trader, like these are the things that are super important. You need to be able to read the momentum, right? The flow of the market. And so I had this set up before New York Open, right? Now we get New York Open and then price spikes aggressively to the downside, very aggressively. So when I see the price spike down, I'm like, okay, you know what? This push down, which didn't last very long because it immediately came back up. This kind of move here, I'm not so sure if this was really to give us lower lows to really set price at a discounted rate. To me, it's looking like this comes down strictly to liquidate buyers, and then we have price come up. So when I got to this sell, at this moment, the intention behind the market, it's kind of in between, right? I don't want to hold this too far to the downside, because what if this big push down that happened around New York Open, what if we're just going to close this sell to open buys, which is exactly what happened. So once price traveled further enough, like once it got down enough, it got below this liquidity here, I'm like, you know what? I'm cool. I'm going to call it, because it might just mitigate in reverse. And then what happened a couple hours later, that's actually what ended up happening. And on top of that, because guys, remember, you want, not only are you looking to have the best entry strategy ever, but you want to have an exit strategy. You want to have a strategy where you understand, why am I getting out of the market? What will cause me to exit? Now, my recommendation for most of you, especially if you're within a year of trading, would be have a predetermined exit. Have an exit that's based off of whether it's risk to reward, maybe 2-to-1, and then you're out. That's it. Doesn't matter what else is going on, because you want to practice just the discipline of getting out. Maybe it's a little more, maybe it's a little bit less, up to you. And then eventually you guys will be able to use your perception of the market to exit out of the market manually. Or it might be to let your trade run a bit further based on your experience, based on your evaluated experience, based on the market conditions. So for me at this point, right, on going on to my 9th year, at this point, like I have created a certain level of discernment with certain situations. So for example, last week I let some trades run. Last week we had like an 11-to-1, we had an 8-to-1. This week I had no trade went over a 4-to-1 this week, because I just didn't see it. There were no things that would do that for me. So for this trade right here specifically, this was closer to a 2-to-1, a little over a 2-to-1 exit. Now, let me get into the chat here real quick. What's up? Surprise trading New Jersey. So my TP was the opening of the sell candle, exactly. So right where this started to tank and liquidate buyers, that's where I took profit. So with that being said, all that being said here, I'm going to show you guys how I really document this for myself. And I use this because this is what gives you the lessons so that you can take with you in the future. So, okay, what kind of mindset was I in for this? And so right now I'm kind of just redoing what I would normally do. And so in this case, I was definitely patient, right? This trade didn't play out until like 2 hours after New York Open. So I was patient. It was Monday. So it was a fresh evaluation of the market, of my expectations. So more than anything, I was focused, and I was patient, and I was neutral. So those are the things. And this is, if you guys notice, with mindset, there's also a whole bunch of negative emotions that don't serve you. So in this case, I was pretty relaxed. So it wasn't no big deal. And then pre-trade. In this pre-trade section, what I do is I'll basically, walk myself through what's happening in the market. And so if I pull up the let's see here, post New York Open, I like to label, kind of what the trade was looking like, what it was doing. But when we look at this, whether it's on a chart or whether it's, here, if I'm looking at the situation and I'm walking myself through it, I'm going to type out, what was going on for me in the moment. So for pre-trading, when I'm looking at that here, then I'm going to type out, like first day of the week on over my trading plan and foundation, reviewed strategies. The only goal is to be disciplined. I basically remember what I've written, so I'm kind of just doing that again. And so, cool. Market not giving me anything too clear off the open. Waiting for price to approach US 30 POI. However, will be based on what NAS, SPX are doing as well. Cool. Pre-trade. Now, what's the quality of this setup? Honestly, this setup was not one of my favorites. It really wasn't, just because it was choppy, and then NAS and S&P weren't really doing the same thing. So I'd be between a 3 and a 4 for me. And then the risk reward wasn't the greatest, but it was still worth it for me, right? So then what I have here is, hold up, where did it? All right, things got moved around for some reason. But anyways, so then at this point, I would have my, what happened? My reflection, the result of the trade, the win rate, the risk to reward. So over here, I guess I'll go in this order. So what was the result of this trade? This was a winner. And then what was the risk to reward on this trade? So for me on this one was about a 2-to-1. After that, I put a win-loss percentage. Here's why I do this. The reason that risk reward and my win-loss percentage are different ideas, that's because this is where you want to keep track of what your actual risk percentage, what are you doing? Are you over leveraging? Are you under leveraging? Are you someone that, because this is what needs to be consistent. The risk to reward aspect will give you what your outcome should have been like. And then the win-loss percentage shows you what you actually did. I'll say that one more time. The risk reward section. So for example, if I lose, I'll put -1 because I lost. That was my risk. I happened to lose. For reward, I'll put how many times more I won than what I was supposed to risk. But from a win-loss percentage, this one, I do have multiple accounts. So, and different accounts have a different risk percentage. But I do have like what I call my master account. And so for my master account, my risk percentage is 0.25%. That's what I do. So in this case, right, I ended up taking, I ended up doing 1/2. So cool. That's what I was supposed to do. Now, for you, it might be different. You might be risking less. You might be risking more. You're probably risking more. And you might have different accounts as well. So, but if your trading plan was, hey, I'm supposed to risk, let's say 1/4%, but then this trade, I ended up doing 2% profit, that should have been an 8-to-1 then. So, okay, I definitely over leveraged. That could have been very bad if I didn't end up winning that trade. So this is half for me, right? All right, now reflection based. So here's where I took a look at the market. And here's at this point, it should be fresh. And so in this case, it's, let's see, price was definitely testing and luring in retail sellers today. Few spikes close to POI before I executed. Definitely tested this. I typed too fast. It's just not good. Definitely tested discipline. Manual exit based off of New York Open movement. add institutional sell, open, and use that as my TP. Conservative exit today. Win is win. Cool. Something like that would be my reflection. And then direction, right? So what kind of trade was it? Along? Did I buy or did I sell? And then here we go. And then the trading plan. Was I disciplined or undisciplined? This is really important because what you'll notice is at the end of a month, for example, at the end of a week, you want to see, okay, how many trades was I undisciplined? How many trades went outside of my plan? Because sometimes what happens is we're looking at our plan and we're thinking at the end of the month and you have a certain result. And then you might be happy or upset with that result. But you have to realize, okay, well, is this truly a good representation of my trading? Right? Is this, what's up, guys? Is this truly an accurate representation of my plan? And based on how many undisciplined trading tabs there are, then you'll know, wow, like out of 30 trades, 7 of them were undisciplined. Guys, if one trade alone can completely throw off your equity curve, if that can completely change how things go for you, then imagine if you have a handful in a month. So one of the like goals that you should have for like ever is how few undisciplined trades I can have. From there, we do have the before and afters. In this case, I only have the after screenshots or links for you guys. And then the setup, right? So for setup, what kind of setup did I take? You may have a completely different trading style. So your way of trading the market may be very different than mine, right? You may be trading in balances. You might be trading off of trend lines. You might be trading support resistance. You might be trading mitigation. You might, whatever it is. And that's just to see, okay, oh, it looks like this month, this type of entry that I have did well, or it didn't. And so after, all right, cool. So that's basically, guys, what I do trade after trade after trade after trade. Now I'll go over a couple trades, and just to show you guys what I was doing. I won't journal all of them again because I think you guys kind of get it. But let's see. It looks like everyone's all right. Cool. Y'all vibing. Is this anyone learning anything new? Maybe having a different approach to the market. Hopefully you guys can take home something with you here. So all right, this trade was really interesting. This is a really interesting trade for me because both types of entries that I have, both setups that I use, happen at the exact same time. So it was wild. This one kind of blew my mind. And I honestly super stoked about this one. So I want to show you guys what happened. So big picture, right? Big picture. For me on indices, if I'm on the 15, I'm like, yo, we're on these high time frames. Just because our ability to take trades on indices on the smallest of time frames, they would just go so well. And so zooming out is just, even better. With forex metals, like with everything go higher time frame to lower time frame. But when I have to refer back to the 15 and for entries, not just for exits, but for entries, it's pretty cool. So here's what happened, right? Last week, it was like New York, it was like London session on Monday. Now this is on Wednesday. Okay, so this is halfway through the week. So on Wednesday, I see we're finally getting back to price action from Monday's New York Open. All right, so this is 2 days. This is 2 days here in between. So we get to this zone. So price gets into here. Cool. This is a normal mitigation play for me. What does that mean? Okay, we have liquidity. There's price sweeps retail buyers. Imbalance follows. We have continuation, higher high. All right, cool. Now we get all the way back to this level, all the way down to here. All at the same time, divergence went down already. US 30 and S&P, they already are below these levels. So I'm like, all right, cool. This is looking great. On the 15, I have a place to take an entry. I can just take it off of where we've seen previous lows. Cool. Let me take that. But what got even more interesting was what was happening on the 1 minute and the timing. So at the same time, remember, nothing is a coincidence here. This is all of this thing is an orchestration. Same time, oh, look at this. It's 30 minutes before New York Open. Prices consolidating, sideways movement. Okay. All right. Oh, look at that. New York Open sweeps liquidity. Hello. Hello. So we have that liquidity capture. And then what happens? This is the 1 minute. You guys, if you can see this, it spikes down. It comes up again. So this is for some people. If you're only looking at this, they're going to go, oh, look, break and retest, right? A lot of people, this is how they trade. So this is looking to lure in, liquidate buyers and lure in sellers at these levels. And so not only did it have the 15-minute mitigation, but then I'm seeing, and this, I call this a shakeout setup. This is where the market does the break and retest. And then once it's doing that retest, I'm thinking this has lured in enough sellers. Plus now we have volume because it's literally New York Open price action. This is going to fly. And so I had different setup, double confirmation, took that buy right there, off it went, right? And it went even further. So I had very, very strong entry confirmations. Very strong entry confirmations. I let this ride. I think it was like 20-point stop, give or take. Took it for like 60, call it a day. So this is very, very unique for me. And it was really cool. All right. Sweet. So in terms of journaling, I won't dive into it too much, but what I did do, right, is I basically here for setup, I had both, which I don't think I've ever actually had both. So really, really unique. Actually, I don't even think I can choose both. I don't even have this set up. So I have multiple. I'll have to change that actually. Hold on. Type, select, multi-select. All right, cool. So there we go. Yeah. And again, this is what I built this thing for myself. So if you guys are looking to use a trading journal, then obviously you guys can tap in with, I have one. Y'all just have to go to, that's where you can get yours. But here, what was the mindset? This one I was prepared for, super prepared. And then I had a lot of confidence knowing that I had double setup at the exact same time. So I was super focused. And then, I can write out the rest of it. One thing that I did note with this was having those two setups happening at the same time. I am going to be looking at what kind of win rate does it come with. If both of those moments happen simultaneously, is my win rate very high? Could that give me the ability to, risk a bit more because the win rate is much higher in the future? So I do need a lot more data before I can do something like that, but just something that I think about before anything else. Now, let's see, what time is it? All right, cool. I'm going to run through these real quick. Then we had FOMC, right? The meeting minutes. So this one was fun. I took a loss actually during FOMC, and then, we clapped back. But this one was great because there was kind of a shift in momentum on how things were moving along. But I took a setup on NAS, and what happened was, this is what happened basically. I'll give you guys the rundown here. So I'm going to split my screen so you guys can see it. So the winner, right, the winning trade was this. Here we had the sell-off, cleared liquidity, market bounced from here, and we had a nice 15-point stop. Took this for like 60 points. I actually exited, and I wanted to take a little further, but I was like, you know what? This has been bearish for a while. I don't need to take it that far. Here we had a nice little bullish candle on the way on this, in the creation of this imbalance. Just in case the market wanted to play off of this, let me just call it a day. So good 4-1. I'm a happy camper. Now, what I want to show you guys, I want to split the screens because I want to give you guys an insight on what happened around this time. This was like 1:15 on Wednesday. Let's see here. Did this even go? Okay. Hold on. All right, now it should do it. On this one, and then I gotta do it for both. Okay, I see. All right. So how did the market unfold during these times? So here is what I did. Now, looking at this here, and if I go full screen, can you guys still see that better? Let me make sure here. All right, cool. So here was my first swing at the market. We had, 1 p.m. Central, 2 p.m. Eastern. Market starts to do its thing. So the market does what? It spikes down. And then here's why I chose NAS originally. So if I'm looking at this, I see this high over here on US 30 is a lower high. Okay. And then I see price come down to here. So on US 30, right on the right side of the screen, I'm seeing lower high, lower low, price is pulling back. All right, this could be a lower high. Okay. Meanwhile, US NASDAQ on the left side of the screen, right? NASDAQ gave me a lower high. Cool. And then it showed a lower low. Great. And then now I got a higher high over here. Y'all see that? Y'all see this right here? So I have NAS giving me this higher high. So, market definitely went a lot more bullish here. While US 30 gave me this lower high. Okay. Interesting. So when I'm like, all right, well, news is going to happen. What has a better chance of surviving this structure? To me, I'm thinking NASDAQ does. Because NASDAQ just showed me, like, we're a bit more bullish. And so the market starts coming down right over here. And here's where I take my buy. I take a buy right there. So this is the one that I lost, right? So I take a buy right over here. Why? Because we also got the market did this. The market went tanking. So market pushed price down before it quickly recovered. And so I'm thinking, all right, we get to this area. And so we did. Specifically, I see, we've had some strong levels of support before that institutional sell right here. We could get a nice little sell-off in here. And we did. I went into profits, right? I had a nice, I think like a 20-point stop. All right, cool. I go to like 1-to-1. I'm like, all right, sick. For me, my rule of for exiting the market is I needed to travel the distance that it dropped. So if this drops here, 40 points or whatever, I need this to go up 40. All right. It didn't. So I didn't go break even. I was up decent. I didn't go break even yet. Price comes down. I'm like, all right, cool. No big deal. And then the thing is, at the same time, I'm looking at it like this. And so I see US 30 pulls up to its zone, and this mitigates way more nicely. And I'm like, oh, this one did that, its thing. Okay. And then it got me thinking, I wonder if this is going to, I wonder if that was it. So what happens? All right, 110, we get the massive spike down. I get stopped out. But as it's crashing down, because I have literally both screens like this, I'm looking at US 30 and I'm like, wait a minute, US 30 stayed inside of its range while NAS and S&P went below. I'm like, oh, okay, I see. I was like, it's just flipped. I'm like, the weaker bear is US 30 now. And now US 30 is the bull out of these indices. Because it didn't drop anywhere near as much as this did. And so I was like, all right, no big deal. So got into our zone. took a nice little buy, 15-point stop, ran it up, and I was like, sweet. And so even though I took my loss here, I got waked out. I realized the reason I got waked out was because there was just more bearish momentum with NAS, but US 30 was still valid. US 30 was still within its range. And so that's how I ended up kind of shifting my bias and actually changing which indice I was playing with. And so this is what we got going on here. That's why I actually ended up taking this. Could I have taken this a bit further? Honestly, I liked how I approached the market here, because yes, this could have gone up even further, but the reality is that we've been bearish. I had been seeing lower highs, lower lows on high 5, 15. So I'm like, I don't want to push my luck too much. And so what did end up happening, guys, is this: we ended up getting NAS, FOMC's movement pushed NAS to the upside, and it liquidated the sellers, filled some imbalance, and then the market went down. So US 30 finished doing that too, and then we kept going down. So for me, I'm never really afraid of just getting out of the market. That's not something that I fear whatsoever. So, okay. So that was the third setup. And the last trade of the week, guys, for y'all that I'm going to go over is a trade that we took on post New York Open with NAS. And this was Friday. So this was yesterday. So Friday here, last trade. And it was just waiting. This one had a lot of patience. So I'll show you guys on the live chart how this one went down as well. It has nothing to do with news. No. Guys, remember, news is an orchestrated situation. Don't forget that. All right? News is just the excuse for price to move. And so it could be that, and that's the thing, is different excuses are used different days. And so honestly, NAS could have been a crazy day. There was a lot of different setups. It was epic. It was seriously so crazy. So I'll walk you through the one that I didn't take because of risk reward, and then I'll walk you through the one that I did. So starting off with NAS, the first trade that I was looking for, because I was looking at trading NAS, was the buy. The problem was it just didn't go as deep as I wanted it to. All right. Had we gotten into this, and here we had liquidity building up on Friday. Here was New York Open. Liquidity, and then we had New York Open. Didn't really give us higher highs. It struggled a bit. And then, okay, we got down to here. So we were ranging. Lots of liquidity building up. All right, so I stayed out of the market. And then here, I saw this. So this is here. I'm literally going to walk you through my thought process. If you guys are on my live streams for these, because we do it every single day, then you guys saw how this went down. So we saw this spike up, and then it immediately came crashing down. So we're like, oh, cool. We may be looking to sell here. And then what happens is, okay, price does come down, but it was a nice quick little flash crash. Price comes down to here. All right, takes care of the money that was sitting there. All right, so this is now liquidated buyers. Okay. So once price did this and then did not give a lower low, that's when I knew, okay, I don't know if we're going to keep going down anymore, because we didn't confirm bearish price action. Price comes back up again. So then I'm like, okay. So I'm not going to look to sell this here because we didn't get lower lows. Price didn't really stay here. This wasn't to give us bearish structure. It was just to get buyers out. So even though price came here, rejected off of the previous resistance levels, at this moment, I'm like, yeah, you know what, man, missed out, but it is what it is. Dropped like 30 something points. But at this point now, I'm like, this is good. I think we can get a nice buy. But I was waiting for it a little lower. So I thought, hey, you know what? We'll probably get back to where we saw support before this spike down. That'd be nice. Didn't get there. So, hey, guess what? Missed out on the buy, and price just kept going up. What I did see here was had a little spike up, here during late London session, and then the market left us in balance. So this is the last push up before the market left in balance. And at the same time, when I looked at US 30, so I'll show you guys what happens here. With US 30 in these specific moments, US 30 was taking care of liquidity as well. So if you look, see here, it's taking its time here to load. So these entries were around like 10 a.m., right? So once price finally, all right, once we finally got above this, so you see how price spiked above these, we had equal highs. So this is resistance. A lot of people sell here, and they would have done okay. But once price spiked above here, and that came right into my point of interest on NASDAQ. So again, right around these times, that's when I decided to sell. And so this is less than a 10-point stop, and then sold it down. Because my stop was very small, I didn't need the market to travel too much to make a 3-to-1. So filled it down, filled some imbalance of this. Great. Collected my money. Market came back, did it again. Came back here, pushed it again. But at this point, I was already out. So that was the trade. That was the trade that went well. This was a good setup. Now, the great setup was this one. So the final setup was this one, and this one actually was playing out closer, towards the end of yesterday's New York session. So price did what? I think you guys can see this one. Cleared these lows, liquidated those buyers, quickly reversed, left in balance, gave us higher highs. Price stayed above here, and then we finally did come back down right to this level over here, reversing off of previous lows, previous resistance levels of support, entry, 20-point stop, off it went. So these were the setups that I liked the most. This one was really, really clean. I know a lot of these we did live. Some of them weren't, but that's basically the recap of this so far. And with these trades, I wanted to go over a couple so you guys can kind of see the journaling aspect. And you do learn a bit about your winners, but honestly, you learn a lot more based off of your losing trades. So how do I stop? There we go. So in terms of how trades go, that was a breakdown, guys, of how my trades went this week. As you guys can see, kind of split between US 30 and NAS. It's not that I ignore S&P, but just sometimes it's just trading in between those levels. So it's like in the middle of both. So there were some good S&P trades. Don't get me wrong. Nancy actually took a couple. I think she traded S&P more than US 30 or NAS. So same household, different outcomes. And then guys, remember, I'll go over this and I'm just walking you through it pretty quick. It's not meant to be like a thorough, lesson. But it's because I've put in, think about it like this, guys. I've done live analysis and every single, at least Monday through Friday, live since December of 2017. Every single week. So that's 18, 2019, 2020, 21, 22, 2023. So that's almost 6 years of live analysis that I've done in front of thousands. At this point now, probably a million people. And so I've seen the market so much. So that's why it's just like muscle memory, right? And it might take you a lot longer to process certain ideas, and that's fine. That's fine. And you might have to, draw it out and be very thorough. I wouldn't have as much as I have on the chart if I wasn't educating and walking you guys through it at all. I would have very, very little. What been your best trading year? If we include portfolio stuff, then it was 2021 because of crypto. Yeah, 2021 was definitely an absolutely insane year. In terms of just day trading, this will definitely on pace to be be my year, like the biggest one. Every year is just because there's just more capital, so it just kind of makes more sense. Percentage wise, though, 2021 too, just because the volatility was absurd, and it had a slightly different approach. But with that being said, I think in terms of like peace and then just levels of preparation, like every year gets so much better. But 2023, yeah, Jordan here, right? But anyways, guys, please make sure you're journaling and documenting because you want to learn from it. If you do want to have your own trading journal, then obviously you guys have mine. I pinned it to the top. You guys can go there and get it for yourselves. And then I also give you guys a little bit on the, if you refer to somebody else, you get like $5. So yeah, make sure you guys are doing this. These are the things that people skip, so don't skip them. And then this upcoming week, let's see if I'll do some of these trade of the days. If not, maybe trade of the weeks. And then on top of that, what I will add is if you are in Chicago, then on Friday we're doing this in person, doing all of this in person. And then other than that, we'll then be doing this in person in LA on the 28th, in Phoenix on the 27th, and then in Dallas, I believe, on the 20. Wait, hold on. No. Let me go back. Chicago on the 25th of this month, LA on the 28th. Yes, on the 28th. Phoenix on the 30th, Dallas September 1st, and then Miami September 4th. All of those will be in person. And then once this uploads, you guys will have all the links in the descriptions for all the good stuff. But anyways, guys, much love, and I'll see you all very, very soon.